What's going on, guys? Welcome back to another episode of Trading from Scratch. In the last video, we talked about fair value gaps and how price reacted when tapping into them. But now you guys are going to learn what happens if price completely rejects the idea. And that's where inverse fair value gaps come in. By the end of this video, you'll understand what they are, how they form, and how traders use them as potential areas of support and resistance. But first, guys, don't forget to like, comment, and subscribe if you enjoyed the video, and link in the description for my Discord as well as my Instagram. Join the Discord if you guys want to talk to other traders and grow within our growing community. And let's all get on this journey together. All right, guys, let's get straight into the charts. So in complicated terms, a fair value gap is an imbalance left when price moves aggressively in one direction. But in other words, it's pretty much when we just have 3 candles in a row, and then when we have the first candle and the third candle creating space in between that second candle, that is the imbalance that we use. That's the gap. And this is a gap that can be used as a confirmation because price tends to dip into it. And then if we get a break of structure out of it, we tend to go in that same direction. And remember, same goes for fair value gaps to the downside as well. Now, here's where things get interesting, guys. Sometimes price comes into these fair value gaps, but then it actually doesn't retrace back up. It tends to break through it. Look in this example right here. So we originally get a nice confirmation and we respected this fair value gap. But as we trail down, guys, what happens? We continue. Oh shoot, this candle right here, we broke through it. This is what we call an inverse fair value gap. And yes, this is a confirmation that we want to continue in the opposite direction. So think of it as when that happens, a fair value gap can flip its purpose. So once again, right here, when we have these candles right here, this is pretty much what we want to see coming out of this bearish fair value gap. We want to enter into it, which is actually what we did, but then we want to retrace down back out of it. But in this case, we don't actually do that. What we do get is a close outside of it. And this is our sign that we did not respect this fair value gap, and we're actually using this as a inverse fair value gap to continue higher, which is what we end up doing. So think of it like this, guys. Instead of it acting as a support, it's more so acting like resistance because we're breaking through and we're continuing higher. And then, of course, just to remind you guys, on the contrary, instead of acting like resistance, it can become support when we have those respected fair value gaps. So that is the difference between a inverse fair value gap and a regular fair value gap. All right, guys, now let's look at a bearish example of an inverse fair value gap. So same thing. We have a fair value gap. At first, we're coming down, and we enter into it. So at this point, what we typically would want to see is a break of structure out from where we opened on this candle right here. But instead of getting that, we actually continue up and we close outside of it. So always remember, it does not count as an inverse fair value gap unless we close outside of the gap. The moment you close outside of the gap, that is your sign that you want to continue up into the opposite direction. And my apologies, this was a bearish fair value gap turned into a bullish inverse fair value gap. But now we're going to look at an example of a bearish inverse fair value gap. Make sure you guys are taking notes, okay? So here we have an example of a bearish inverse fair value gap. Remember, it originally started as a bullish fair value gap. It actually did get respected, but then price disrespected it by closing outside of the box. The moment we close outside of the box, this has now turned into a bearish inverse fair value gap, and we continue lower. This is a confirmation that we can use just like a regular fair value gap. And then don't forget, guys, a regular example of a fair value gap is one like this, right? Price taps into it, we respect it, and we go up, okay? All right, guys, so let's practice. I'm going to give you guys 3 tests here to see if you guys understand this. So I'm going to mark out a fair value gap and you tell me if it's a inverse or a regular one. All right, this is the first example. Did we respect this or did we disrespect this? Yep, we respected it. We tapped into it and moved higher. All right, example 2 for you guys right here. We have a bearish fair value gap. Do we respect this fair value gap or do we disrespect it? Okay, 2 things can be true at once. So we originally respected it, but then we get a close outside of it. And at that point, we disrespected the fair value gap due to this candle right here. And we continued higher, which this then turned into a bullish inverse fair value gap. So yes, guys, keep in mind that sometimes we can originally respect a gap and then end up disrespecting it. All right, last test for you guys. Do we end up respecting this gap or disrespecting it? All right, let's follow the trail. We tap into it right here. We actually originally respect it, but then same thing like the last example, we end up disrespecting it minutes later with a close outside of that box. And this has now turned into a bearish inverse fair value gap. So just some important keynotes, and make sure you guys are writing things like this down, as well as just definitions and, whatever notes help you understand and retain this information. All right, guys, just like a regular fair value gap, you cannot just trade off of this. You can't just see a fair value gap get confirmed and hit the trade button. And the same goes for inverse fair value gaps as well. You can't just see them get disrespected, turned into inverse fair value gaps, and immediately hit the trade button. Now, are those both good confirmations for trading? Yes, but in context. In context to what? In context to liquidity, in context to time, in context to time frame, in context to the buys for the day, right? In context to how market is currently moving during that day, in context to many, many things, but they need to be put together in a set order, in a set system, and that is what you will end up calling your strategy, whether you use mine or make your own. Right here, we have another beautiful example of a inverse. Hopefully this video helped you understand inverse fair value gaps and how they differ from regular fair value gaps. Now remember, just like all of these other concepts that we learned, don't try to trade these by themselves. They're just another building block that we can use, so when we're ready to put all the pieces together, it all will make sense. And if you enjoyed the video, guys, don't forget to leave a like, comment, and subscribe. And check the description, guys, where my Instagram and also my free Discord is at, where you guys can talk to other traders and grow, and we can all get on this journey together, guys. That's what it's all about. All right, I love you guys. Stay blessed. Peace.